This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:33 p.m. on February 9th, 2020. This is a live strategic Sunday weekend webinar, like we always do, preparing our members and traders for the coming week and the following weeks. The session will be recorded, uploaded to YouTube, Clueless A Trading YouTube channel for the viewing by anyone out there with the internet connection. More importantly, our members can listen to it at their own time, preferably before the market starts tomorrow. These are directly tied in with relevant information that is going to help traders make real money in these volatile markets that we play in. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. Quick reminder, like I always do, we have a fantastic Instagram channel, Clueless8 Trading, Clueless8_trading on Instagram. Absolutely amazing resource for non-real-time options charts, which real trades that we have done during the day, during that particular day, and you can certainly see what it looks like on the charts, which is a heck of a lot more exciting than when you are just playing with numbers, because here you have a visual representation of how fast and furious these options can move. And so it's a great resource. Do follow it and spread the word so we get a lot more followers. All right, so on that note, let us begin. Straight to the point. I've gotten a couple of really constructive feedbacks from some great people, and they have mentioned something that I will certainly try to my best efforts and try to provide as much information as possible within the shortest period of time. So let's try to attempt to do that. One of the key things is that we have all types of members. And while I'm talking, please take a look at the live charts here. This is the live market happening. You can see how absolutely accurate to the dot the futures were down about 12 points. There's a little mini hammer right there, and you see what's happening right now. Futures are only down about 5.5 right now. China market's just open, and of course that's going to be the determinant on the first part of the Globex session, which starts at 6 p.m. Sunday evening and continues throughout the night till 8 p.m. I'm sorry, 8 a.m. the following morning when the U.S. pre-market futures take over. All right, just for newer members, people know that this is a 24/7 global trading arena, so you can see what's happening right now. We are starting to see the direct contact, direct hit, and one must appreciate it, one must understand it because it's been shown visually. Direct hit on that big support line. There is one more support line here down at 32.88. We'll talk about these things as we move along, but you can see that what is happening right now. Futures are climbing fast and furious. We're going positive. We're going positive, okay? We're almost flat right now, down one. So saying all that, one of the key things I want to impress upon everybody is that we have all types of members. We have amateurs, we have mid-level intermediate members, and we have advanced members, advanced traders. So what I'm trying to do is trying to find a middle line of trying to communicate all these very relevant information, and there's lots of it, which will help you control your trades, manage your positions, and provide the maximum profit maximization in these type of algorithmic high frequency driven volatile markets. So I do apologize, and you must all understand, and I'm sure you do, that for a beginner they are looking for a certain thing, for intermediate mid-level person they're looking for a certain thing, and for an advanced trader they're looking for certain things. So I'm trying to mix that and walk the middle line. So that's why sometimes we kind of go along a bit, but I'll certainly take the constructive feedback constructively, and I thank people for providing that. I want other people to provide that too. But remember, there is only I have to stick to my guidelines as to providing the most accurate technical, fundamental, and economic information, and sometimes I have to explain some difficult concepts which take a little bit longer. Otherwise, like I always say, 99% of the information that I'm providing is on my real-time Twitter feed. Okay, so if you follow that very closely and you learn yourself, you take some of the advanced coaching sessions, you take advantage of all the resources on the YouTube channel under new member introductory videos, massive resources, then we can certainly keep these webinars very short, because then you'll understand what I'm talking about as I move along. Okay, and it makes life easier for me too. So keep in mind, it takes two to tango. All right, so let's move on. So we have an important week, very critical week coming up. We have a Fed not Fed meeting, but I believe it's a Fed testimony from Chairman Powell coming out starting on Tuesday, ending on Wednesday. And I can assure you that the markets are going to be on pins and needles to find out what his feelings are, what his expectations are on the coronavirus, on whether or not the global economy is going to slow down over the short term because of the slowdown and the closure of the Chinese economy, which has a direct impact across the board. So everything is interconnected. So that is going to be a very important 2 days. And I certainly want you guys to keep that in mind. We are also coming into Valentine's Day. I'll keep this keep this sweet and short, okay? Sweet as your Valentine's roses, all right? Generally speaking, the markets don't crash. Markets are manipulated beasts. I want you guys to understand that, all right? There's a lot of underhand manipulation in the market by bigger players that no one will ever talk about. And it doesn't have to be just investment banks. It can be the Federal Reserve, Plunge Protection Team, PPT. Look it up on Investopedia or in Google. And when markets really fall really hard, they go into work. And their business is to stabilize the U.S. financial markets, which is directly tied in with the U.S. economy. So the U.S. consumer, who is 80% of the U.S. Gross domestic product, U.S. consumer stops spending, we all stop spending one day, the U.S. economy is going to collapse the next day, literally, okay? So that's just the way it goes. So the bottom line is that generally speaking, before a major holiday, which is not just a holiday, it's a massive shopping event. It's a massive shopping event, whether it be Thanksgiving, whether it be Christmas, whether it be Valentine's Day, you generally don't have a big crash. However, during the week, you will get some very big swings, just the way we saw since the 31st of January. Very clear. And by now, you guys should all expect that and not scare yourself to death. All right, because these charts are the only things you'll know where the markets can fall, where they can rise from, and nothing else will ever tell you anything.
The next Monday is President's Day.
And next Monday is President's Day. Thank you very much. It is not I don't believe it's a stock market holiday, is it? Or maybe is it?
Yes, it is. Yes, okay. It is.
I am a dumb idiot. That's why I call myself Clueless 8. That's great, actually. That's great. And next Monday is President's Day, because I looked it up and I didn't see it, because I know the stock markets don't always follow national holidays, right? So it is a stock market holiday, and that's great to know. So Valentine's Day, President's Day, two major economic shopping events, okay? These are the economic injectors. People are going to spend. They're going to cut prices on large, expensive products. And people will say, hey, let's go for the President's Day sale. Let's buy a gift on Valentine's Day. So it's all good. It's all good. So thank you for mentioning that. So here is the quick economic calendar before we get into the technicals. And before we get into that, let's just put it this way. We all know what the fallout from the coronavirus is. It's a very serious issue. But from everything that I read over the weekend, it seems like it is peaking. It is peaking, which itself is fantastic news. It doesn't have to slide, but the rate of acceleration of the number of deaths, unfortunately, or the number of infected people, as long as it's decelerating, the ascent is decelerating instead of accelerating, then then basically you have a positive impact on the markets, period. All right. So we're starting off Monday, February 10th. Let me just grab the pen. I'm sure everyone's following me so far.
Yeah.
Okay, yeah. Sounds good. Everyone just put their brains on hyperspeed right now, because this is total focus. I'll speak clearly, and if it doesn't make any sense whatsoever, don't ask me for a long-winded explanation. Just ask me, and I'll give you a short, quick answer on that. So, nothing really here on Monday. Tuesday, very important. Fed Chairman Jerome Powell, who controls the purse strings of the global economy, more important than the U.S. economy, through Federal Reserve Open Market Committee operations, interest rates, and such, repo purchases, injecting money into the U.S. economy. This is what the monetary policy is determined in the U.S. by the Federal Reserve Bank of America. And who's the boss? Jerome Powell. The fiscal policy is determined by the executive branch, the government. So two different things. So we have Jerome Powell speaking at 8:55 a.m. before the market. Very, very interesting. And then you have James Bullard, another Federal Reserve governor, speaking at 1:30 p.m. Very important day. Wednesday. Let's move on to Wednesday. Jerome Powell speaks. He ends his his consecutive speeches at 10 a.m., right after the market closed. Again, another volatility event. Says one thing about whether he's thinking of raising rates, one thing that he's going to cut short the program with the repo program, which I explained very clearly on my last webinar or the webinar before, where the Federal Reserve comes into the market every day and injects about anywhere from $1 to $14 billion, $1 to $8 billion, I believe, by buying mortgage securities and corporate bonds, all that kind of stuff. That's how they push money into the economy. If he says that he's looking to slow it down sooner than later, you can expect the market to fall very quickly. It's going to be a quick fall, but it's going to fall. All right, 200-300 points, just like that. So beware. And then we have nothing really that important. Treasury budget is important, but not that important. Then Thursday comes around. Now we're approaching Valentine's Day. Everyone's feeling a little bit giddy, like, oh, okay, Valentine's Day. Everyone's trying to make the reservations. And every single nice restaurant in New York says, sorry, sir, but you should have made the reservation nine years ago or 2 weeks ago or 3 weeks ago, whatever. If you're a connected person, they're like, hello, Mr. Heisenberg, your table is waiting. So that's just the way it goes. So saying all that, at this point, people, the old-fashioned traders will tell you, oh, market is thin, volume's going to be light, traders are, not really focused on this. That's all garbage. Keep in mind that the machines don't care about Valentine's. The algorithmic high-frequency trading programs don't care about holidays and all that stuff, and that old way saying they're all lying on the beach in East Hampton and no one's trading. That's all BS, okay? The machines are constantly working 24/7. Low volume, high volume, doesn't matter. You still make money in the stock market, period. Let's move on. So Thursday comes over, we have the CPI, and that's the consumer price index, the inflation data. Is inflation picking up, inflation picking down? I don't want to get into a long-winded explanation of that. I've done a lot of that in my previous webinars. All I'm simply going to say, if it's a hotter than expected number, then you should expect the market to get a little bit worried. That means the Fed is going to possibly slow down on the repo purchases. More importantly, they will probably raise rates a little bit quicker than expected. Right now, nobody's expecting any rate hike till after the elections, just so you know. So we need the number to be moderate, not too low, but not hot, the consumer price inflation index. Then what else do we have here? Really nothing. All right, important numbers, but nothing which are really big on the direct impact on trading on the market. Then comes Friday, Valentine's Day. Nobody's concentrating. Everyone's out there trying to find the perfect rose and flowers. And we have retail sales. That is exactly what we're talking about. Big retail sales week. Big retail sales week. We want this number to be as high as possible. Okay? We want this number to be 0.6%. If the consensus, which I don't know at the top of my head, and you can click on this. You can go to this website yourself. You can click on this. It actually tells you what the consensus forecast is. Probably 0.3, 0.4% from the previous one. So what if it's 0.7? Love it. Your Ulta Beauty, your Ralph Lauren's, your and other retail, the XRT, the retail index is going to boom, go through the roof because people are spending. That's what that's what the U.S. economy is based on, spending. So it doesn't matter if you have 2 cents in your pocket, keep spending. So the bottom line is that's just the way our capitalist economy works. So buy now, pay later. So this is very, very important, and we want this number to be strong. We have industrial production, which we want to be stronger. We don't want industrial production to have fallen off the cliff because of whatever reason. We don't have a coronavirus issue here, so industrial production should be strong. We have business inventories, important number. People who are in business understand exactly what business inventories are. So we want that number to be somewhat stronger than we don't want it to be too strong. We don't want it to be too weak. Consumer sentiment, very important. Consumer sentiment, because that's what drives retail sales, and retail sales is driven by consumer sentiment. You feel good, you buy more. Okay, so consumer sentiment is an important number, and we want it to be strong. That's it. So this is the coming week that's coming up. Very, very important, and also equally important. But this is what's going to determine the fate of the market in the first couple of days of trading. There you go, Jerome Powell. Let's move on. Let's get this out. Okay, now we are out of this. We're going to close this out. Perfect. Let's move on. We have earnings. I have a huge earnings list. I'm not going to sit there and go through each one of them. I put them out. One of the key earnings that's coming out this week on Wednesday is Shopify. It's an Amazon. It's Amazon Junior. It's Amazon on speed. Okay. I expect Shopify to go higher. Let's see. If it doesn't, I'm going to lose a bunch of money. I'm going to buy some protective puts on a straddle, and we shall see. But Shopify generally moves anywhere from 30 to 60 points. We'll take a look at that chart in a minute. Let's take a look at the markets. These are the only charts that you guys need to really track. Okay? So when you're sitting there and the market's down 300 points and you think the world is falling apart and you're not looking at this chart, you're just doing yourself a disfavor. So if you're losing money because you're emotionally in panic selling because the stocks and those options on some heavy duty hardcore stocks are down, and then you see it turn around and jump up hard, and it's happened a lot, then the only person you have to blame is yourself. I have nothing to do with it. I will keep on providing these absolutely precise, absolutely precise type of roadmaps. It's your job to stick on the road. That's all. How you do it, I am not your emotional psychologist, obviously. I am your technical psychologist. So that's it. So if you look at this chart here, it's pretty clear that the uptrend is still quite intact. This is a 15-minute chart. So it's showing you the gyrations during the day. And there are lots of gyrations during the day. So we have these consolidation channels. Those are these lines right there, right there. And this was my last line. And remember, I didn't draw this chart tonight. I drew it a couple of days ago, and I kept on adjusting it on Friday. So look what the markets did right now in the Globex market. Okay, you can't get any better than this. It fell below that, created a little hammer right there, and now it's bouncing up. Now, somebody who's a novice, who's new to the business, always expects things to be straight line, 1 + 1 = 2. In trading and in the stock markets, 1 + 1 never equals 2. Never. Okay? It's a fractal of 2. Somebody doesn't know what a fractal means. I don't blame a lot of people who are not math oriented understand that. Please Google it. Okay? So you will have a variation of that number. It'll be 2.1, 2.2, 2.3. It is never perfect. And why is it never perfect? Because markets never, ever go in a straight line. They always climb waves of lines. They're algorithmic, not arithmetic. Okay? So that's it. So saying all that, these are the charts that you got to follow. You got to focus on it. You got to force yourself to understand it. It is not rocket science. Red lines are supports. When they break that, markets generally tend to cascade down. This is the line that I am watching, which is around 32.88, because once 32.88 breaks, we are going to this was the previous gap. See the gap right there? Let me get the pen. And then you have a fast move down. Now, regarding doing intraday shorts on the SPYs, we bought those SPY puts on Friday for the day at around 60, 62 cents. They jumped up to about 75 cents. Then they pulled back to 20 cents because the markets actually went up a little bit. Then by late afternoon, they were back to 75 cents. So you could have bought it at 15 cents, and these are for fast traders. You want to make some sweet money? 15 cents to 75 cents is 400% ROI. These are the SPY puts that I've told people to buy, which were February 7, 332. So if you're going to be that active with that, don't expect to snooze on the job. You got to keep your eye on the screen. When they move fast, sell it. If you want to put a whole bunch of your account in it, then it's like, playing Russian roulette. Okay, you put a gun to your head to blow it out. All right, because you don't do that. You play it with small amounts of money, and if it goes, goes. If it doesn't go, it doesn't go. I just want to be very clear about one thing, ladies and gentlemen. Okay, if you're going to play these hardcore, very small, cheap puts intraday, just for that day, you better be very, very vigilant. Don't come to me and cry and say what happens if it doesn't happen, because that's the stupidest question I can ever answer. It's expiring the same day at 4 p.m. So what do you want me to say? Just want to be very clear about that. Good money can be made. Good money can be made on Friday lottos, but you need to be stuck on the screen. And each one of these candles, make some money, get out. If it doesn't work, don't cry. Or certainly don't cry to me. Okay, let's move on. So here we are, very clear. Am I clear on this chart? I need a quick yes or no.
Yes.
Yes.
Good, let's move on. So this is your 15-minute chart. You can clearly see here we have a very wide, and this is something I do want to point out before we leave this particular one. Pen color is what? Blue? Okay. So you notice here what this date here is the 26th. That's the 26th of January. So that's 2 weeks ago. So what happens with this pen? My apologies, guys. It really sucks. Okay, now we got it. So since the 26th, we have created multiple W formations. And finally, around the 6th of, which was only around Wednesday. 6th was what day? 6th was Thursday?
Thursday.
Yeah, Thursday. Okay, so finally on Thursday, from the 26th, 10 calendar days later, lesser trading days, obviously, it finally broke out, went up towards the upper channel right there, pulled back, tried to go up again, fell. So basically, we didn't, honestly speaking, the way I look at it, since the 26th of January, the markets pretty much did nothing. Right? Yeah, it did a lot. We made a lot of money in between on multiple trades. But if you look at it just from a broader picture, the market since the 26th of January basically just did this. Went back, broke out on the 6th, went up, and then came down and consolidated. This is a very large cup and handle. And these are the handles, these red lines. Can everyone see that?
Yep, you got it.
Okay, very easy to see, guys. Very easy to see. Don't make this complicated, okay? It's a cup and handle. If the handle breaks, we got a major support here, and then we have to talk about things with levels down here. There's a huge downtrend line right there from the 26th that intersects at 32 to 40. So if the proverbial whatever hits the fan, then the markets will fall a good solid couple of 100 points when the handle totally breaks and this support breaks. And again, you don't need me. Buy some puts, buy some VIX calls. You know, you gotta take, you know, some not responsibility. You gotta act on your own because the charts are telling you what to do. Now, is it always that simple? No, it certainly isn't. No question about it. Markets will never make it easy for you to make money on the long side or the short side. It won't. And if you are not, if you're a non-tactical trader, the markets will decimate you. And I'm not saying that to, you know, take somebody's joy away on Valentine's week. I'm telling you the truth. They'll just decimate you. And that's just the way it goes. And if you don't have any, and if you completely exit all long positions, things like this will happen. Well, the markets will go up 400 points in a matter of hours. Now, one of the things that I'm going to put out on my Twitter feed, I want you guys to look at it. I'll put it out before this session is uploaded. It's a very fascinating piece that I saw showing that 60 or 70%, something like that, of the movements in the market happen after hours on the SPYs, on the E-minis. And that's a fact. Now, that has nothing to do with options trades in the middle. But what I'm saying is if you don't have positions overnight, you're probably not going to make any money by trying to enter in the position during the day. You need to have some long positions in an uptrending long-term bull market. Did everyone understand what I said?
Yes.
So when people tell me, you know, I'm going to get out of all positions, I'm going to re-enter in this, they're like living in la-la land, you know? They're living in la-la land. They think that the market will just, you know, they'll just come in sweet and dance and waltz along and enter a trade and it's going to give them tons of money. No, it doesn't work like that. So you always have to be in position, in my opinion, selective positions overnight on an uptrending market. That's it. And I will put that article out, and it's just fantastic. It shows you in graphical format that most of the big money is made on gap opens up or down, mostly up. Let's get the thing out, and let's get my arrow back and move on. That's a 15-minute chart. I don't need to impress upon you that you need to really track it. I post it quite often, just trying to understand what these lines are. Very simple. Don't have to always understand the patterns, but just see that. Now, here is the same chart in a different format. This is the one that I kept on pushing people to say, add your own arrows. Maybe some of you did. I said, print it and add your own arrows. Or right on screen, you can do a screenshot and then go there and print, you know, put your arrows. Because once you start doing that, that's when your confidence in managing your own trades, your positions, and making some serious FU type of money comes into play. Okay? That's why I say again, add your own arrows. You can only spoon feed somebody to a certain degree. After that, when markets get volatile, they have to manage their own trades. So again, add your own arrows, but you can clearly see what's going on. There's a megaphone pattern here showing that if things really fall apart, we most probably, again, I explained this just 2 minutes ago, it's a chance that we will come down and retest these levels. This was the previous neckline breakout. You can see that. There you go. Neckline breakout right there. And the slippage will test the downtrend line. Is that a possibility? It certainly is. It could happen. I'm warning people. If the markets run up, if the markets run up, sorry, I was looking at some text coming. If the markets run up very hard into Tuesday, I would certainly suggest taking down reducing your long position and pulling your profits down, which you should be doing anyway if the markets run up hard. But given the Fed chairman meeting, and if he says anything that will spook the markets, but the markets are manipulative, even if they're not spooked, they'll act they're scared just to get you out of your position. Then this megaphone will come into play. Does everyone understand what I just said?
Yeah, we
Yes.
got it.
Okay, sounds good. All right, let's move on. So basically now we're zooming out. This is the 15 minute. We have a terrific old member here who just walked in, Fish Eyes. I thought it was past your bedtime, buddy. But it's good to know. Fish Eyes have been with us for a while, and he certainly understands a lot of the stuff that we talk about here. So let's move on. So this is, again, the 15-minute chart. There's a gap fill here. So what we did was the difference between this chart here and this chart here is this chart is showing this, well, it's kind of a gap. It's not a real gap, but it still is. It shows here that it filled that gap moving ahead. But I don't want to be repetitious. But what the difference on this chart and this one is what? Can somebody tell me? It's the same chart. What's the difference between this chart? Take a look at it. And this, oh, sorry. And this one. Quick, guys, please. You want me to be fast? You want me to keep it short? I want you guys to think fast too.
One's 15 minute, one's 1 hour.
No, it's not. This is a 15 minute and this is a 15 minute. Okay? Wrong answer. Look again. Oh, sorry. This is the 1 hour. Yeah, what is this? What's on this chart giving you a further roadmap detail? Huh?
Fibonacci?
Yes, the Fibonacci levels. So again, I repeat, focus, please. Makes my life easier, and I'll keep this session in 10 minutes flat, okay? Which you'll understand nothing, and you'll screw up all your trades tomorrow. All right? Yes, the Fibonacci level. So, saying all that, the Fibonacci level is telling us that the 50 Fib, which has always acted as a major support or resistance on the fallouts at the bottom, the 50 Fib, the market always engages the 50 Fib. I've explained this many times. I'm explaining it very quickly again. This acts as a major point of support when it's above the 50 Fib, and from the bottom, it acts as a major point of resistance. So that's it. So if everything falls apart, we're going to come into the 50 Fib and try to make a stand, 32.75. If we fall from 33.25 that we are right here right now and fall to 32.75, which is the 50 Fib, right there, okay? And replicate these charts on your end. It's not rocket science. Makes your life a lot easier. It's 50 handles in the S&P times 8 roughly. That's a 400-point drop. 400-point drop from here to here. Can that happen? It can certainly happen. If Chairman Powell or some other extraneous event, coronavirus found in New York, that's going to cause a 400-point drop within a matter of minutes. More so coronavirus, I think. If they find that there were cases in New York City, you know what's going to happen? The market's going to drop 600 points because that's going to be called a pandemic. So beware of that. So the 50 Fib always acts like that. In the meantime, this is what's happening right now. We are still within the consolidation channel, so I wouldn't say that we wake up tomorrow morning with futures up a gazillion point. I wouldn't say that. I would say that if we do go higher, now on this channel, and let me, this being a bull flag, let me get my pen. And while I'm getting my pen, what is the immediate most maximum upside the market can go to during the night? And where can it open in the morning?
At 33.36.
Yes, exactly. So right there, 33.36, because that has acted as a point of major downtrend. Does everyone see that? Does everyone see it?
Yeah, we got.
Yes, Frank.
Okay, good. So say yes. I'm sure there's a lag by the time I ask the question, but it makes me try to help you guys. So bottom line is that's the way it is. Downtrends are downtrend lines. It's a major resistance. And so we know what's going on. Now this is the 15-minute chart. It's moving. These moves of these futures are up right now. Okay, now this is the 1 hour chart. Now the 1 hour chart is you're zooming out more. So you're not dealing with 15-minute gyrations in the market. Same up downtrend lines, same bull flag. 1 second. Same bull flag, right? There you go. Same bull flag, but zoomed out. Stochastics are saying that we're going to go higher during the night, or at least for a couple of hours till the European markets open at around 3 a.m. this morning. So far so good. Everyone see that?
Yep.
Fish Eyes, are you connected? Okay, good. Let me see here. 1 second, guys. I have still getting used to this new format. It's really annoying the crap out of me. I'm a little bit slow. Where did it go? Okay, he said yes. Fish Eyes. I don't want to offend anyone's political sensibility, but it's kind of funny. Oh my God, that's funny. All right, Fish Eyes, that's made me laugh. All right, let's move on. Certainly give my regards and my respect and our love to Nancy. Let's move on. Let me just go back to people. Hey, I'm getting better at moving toggling. All right, so there we go. So far, so good. Now, second question is, hopefully from somebody else. The first answer was from Heisenberg.
Yeah.
Regarding, okay, so the second question is, what's the max upside that we can see? Please, somebody else answer that.
The upper pink line, the upper trend line around 33.60.
Very much so, very much so. That would make a new high on the market, right? That would make a new high on the market. On the S&P 500, the year high was 33.48 at the close, or no, 33.48, maybe intraday too. Yes, exactly. So I would say max upside is 33.60. That's 30 points from where we are right now. That's about 240 points on the Dow, like a big, nice bull flag breakout. Bull flags breakout happened like this. My charts are very precise, very constructed, and all these patterns and stuff that I teach on my training sessions and stuff, you're seeing it in real life. It's not just for seeing, it's for you guys to make money. So basically, bull flags break out like that, right? So if it does that, 33.60. You do not want to be a hero at 33.60. You want to take down large, you don't want to take down, significantly reduce your long positions, not short necessarily, but you don't want to get happy there because there will be some big sell programs in there. I can write it down in stone. Some big sell programs in there. So there you go. And you will certainly see large buy programs at these levels. Everyone with me so far?
Yep.
Yep.
Okay, perfect. Liking this. So let's get this out, and let's take a look at. And again, I encourage everybody to use investing.com. You can clearly see how easy it is on the eyes. Then when you structure the charts, it just makes trading so much easier. Why take added stress and heartaches just by trying to trade prices when you have a visual roadmap that you can match yours with mine? Need some help in constructing it? I'll certainly do it. So I just don't know why people like to self-torture them. Maybe they're into S&M. I don't know. Like self-flagellation is not something, my idea of fun. So if you, instead of beating yourself up, try to replicate these charts, use your own structure, lines, whatever, and you'll see that it takes a good amount of the stress away. Good amount of the stress away. Now, the daily chart is still mixed. Is mixed because it looks like a cup and handle. And what's nice is they actually tell you what the patterns are if you roll over it. Pretty cool. Sometimes I've learned about some patterns just by rolling over the mouse. That's on investing.com. It's free. Put your email, subscribe to it via email. It's a huge amount of resources. I just primarily use it for charting. So looking at this, it's still a mixed picture because this hasn't fully turned yet. So if this crosses down the stochastics, that means the swing picture is a little mixed. So I would say this matches in with my projection that we might get if we run up, or even if we don't run up, we might get a pullback on either on Tuesday or Wednesday because of the Fed, Jerome Powell. That's your 50-day moving average. And what happened? What did I tell you guys? That the 50-day moving average, I've said it many, many times. I said it in my last webinar, should act as a major support despite the 600-point drop in the stock market, where I got so many texts and comments from so many people saying, oh my God. And I said, guys, just chill out. Because if this holds, I showed the stochastics, I showed this and that, you should have a massive rally, reflex bounce within 24 to 48 hours. Did I say that or not?
Yeah.
Did it happen or not?
Yes.
Absolutely.
End of story. I'm not here to be, put myself and put on an Oscar pedestal and get a thing. I just want you guys to realize that this kind of crap happens in the market all the time. So those are the days you really want to start scaling in and buying good amounts or a good or moderate amount, because it happens fast. Did any of the so-called pundits, other trading rooms you guys might follow, people that you look at, you respect, did anyone say buy the market based on the technicals and stuff, as I said, on these type of drops repeatedly? Did anyone say that? I'm just asking, just curious. Did I'm sure you guys follow some other people. Did anyone say buy the market at these levels?
Some of technical people that I followed did mention buy on that Friday drop.
They did mention that to actually scale into the market.
No, buy into it. That they
to buy into the drop.
Yeah. No, buy to go up. Basically, last week Friday, not this past one, but last week Friday. I think it was the 31st.
31st. Yeah. So they basically said in simple English, they said actually you can buy the market at that level.
Yeah, I had few people that I
No, my hat. The only reason I'm saying that because it's incredible is because I actually that's really respectful.
Yeah, some contrarians that I follow. Yeah.
That's you definitely following the right people, because I didn't see anywhere. They were all like, okay, this is the break. We're gonna get a 5% correction. Blah 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 blah. We're gonna get 10% correction. So this is really good. That the people that you follow, that is fantastic. And I want people can always connect with Z on Twitter, whatever, and ask me. I can certainly ask his permission. You can ask him who he follows, and certainly should do that, because that's fantastic. Because I didn't see anything anywhere, and I don't spend a lot of hours like scouring out the services, but so far as I could see, I didn't see it. Okay, the second thing is the MACD. The MACD is going positive. That is very nice, but we need this line to have a more accelerated turn higher. That shows underlying momentum. So that's we need that. So that will push the stochastics higher, the relative strength index, derivative of the relative strength index, and that should be good for the markets to move towards 3364, which matches with exactly what we showed on the other chart. Yes?
Yep.
Max upside, see how all the numbers match up? Let's take a look finally at the one second. Features are up a little bit. I remember back a long time ago, before the service, anything like, it's like I love futures being up. We all like futures being up. And then I realized it's just a frigging joke. They're just painting the tape. Not saying the futures won't be up in the morning, but it's what happens in Globex futures these days means nothing. It means something, but doesn't mean carry as much weight. Before, if futures were up at night, that means the markets would open up nicely in the morning. Nowadays, no way. So just be aware of that. The weekly charts are more constructive. Now, again, this is the power of tactical structuring of charts, like the way I do it. This is going all the way back to 2018 when we had massive 2,000 point volatility. Forget history. Let's look to see what's happening right now. Now, look how freaking perfect this is, because what these things are doing is what makes you money. What makes you money isn't the fact that you got lucky. Luck is preparation, technical preparation, in my opinion. So I had drawn this. This is an acceleration channel that started all the way on the 30th of September 2019. This line. This is what happened. 2 days of pullback. I had told you guys straight out that the market this is the big broad macro channel, right? That goes all the way down here. So
Yeah.
what did can somebody explain to me very quickly, which will help everybody else? So please, it's not for my benefit, it's for you guys helping other people. I mentioned to you guys repeatedly that this drop, the market would retest what?
The upper channel line.
That's right, the breakout of the upper channel line. See that? Exactly. Who is that, Mr. Heisenberg?
Yeah.
Good. I'm going to have you run the next few webinars, man, because that's absolutely correct. Now, you don't have to be a rocket scientist or whatever. You don't have to remember what I said. Look at it. This is your big channel line. We broke out of it. This is the big macro channel. This is the way I draw things. We broke out of it on December 16th, 2019. We came back and retested it again, right there, on the 6th of January. We went up like a monster, and this is the weekly chart, right? We went up like a monster up towards the upper Bollinger, didn't quite hit the upper channel. Then we pulled back 2 weeks in a row. In between, there were lots of up days, lots of great winners. Some stocks don't even care about what the markets are doing. I'm talking the general market. And then bang, we went up. And then this is where we are right now. So yes, it's a triple retest, once, twice, thrice on the 27th, which was 27th of January. When you have a triple retest, by that time, technically speaking, and by the laws of nature, it shows that's a strong floor. If you can break a floor 3 times thumping it, that means that floor should hold for now. Does everyone understand that?
Yes.
Exactly. And then bang. And look how perfect this is. This is my acceleration channel. And look what it did. It is now just retested it. Look at this. You really can't get any better than this. I'm serious. I'm going to take 110% credit for it. There. See what I'm saying? I'm trying to make this bigger just to make it easier for everybody. There, right there. So weekly is telling me, from a technical standpoint, that if this acceleration channel holds, or even if it slips and slides a little bit, it doesn't have to retest this. If it retests this the 4th time, I'm going to start getting really worried. Just letting you know. All right. I don't want a 4th retest. So generally speaking, a 4th retest means the market wants to go down. Does everyone understand that?
Yes.
Thank you, sir. So this is a little hammer. So if the world of technical analysis was 100% right, perfect, which nothing is, then where is the next level of contact for the markets? Quick, it's right there in front of you.
Looks like
I'm gonna let you guys think for a quick 10 seconds. 1 second. Go ahead, and then I'll come back with. Hold on.
33.98. No.
Yes. Exactly. Does everyone see Mr. Heisenberg answering that? Right there? Yes? Everyone see that? Mr. Khan?
Good.
Mr. Khan, you're connected, right? Okay, fine. So the thing is that So yeah, 30, and that also happens to be the upper Bollinger. These lines, I didn't draw this line. All I simply did, and please, everyone should get into this, and I'll show them how quickly. It's like child's play, using these indicators to draw these. This is simply the dotted line which automatically is put there because that's the upper Bollinger. And what is that number?
3,400.
There you go. So if we get to 3,400, the round number, in the month of February, which I think will happen by, somebody guess and tell me, because I've said it quite a few times, what is generally a strong up week?
Valentine's Day till the 14th.
Another answer. Monthly,
Expiration.
exactly. Thank you, sir. Thank you, Mr. Harrington. Monthly options expiration, which is the 21st. Okay. So there'll be volatility along the way, but I believe we can hit 3,400 by Valentine's, I mean, not Valentine's Day, by thing. Now, if we go from 3,330 roughly to 3,400, that's 70 handles on the E-minis or the S&P 500. How many points is that on the Dow roughly? 560 points. And I'm going to write that down. I believe there is a good shot to, from here to here, by the end of February or maybe the first week of March, that's 70 handles on the E-minis. We have a new member who just joined us, Ms. Thomas. And by the way, guys who have their full names in there, feel free to abbreviate them into little handles so everyone doesn't have to know what your, what your whole family name is. That includes Khan, Mike, you might want to do that, and Candice too. Candice, are you connected? Okay, no problem. So 70 points is 560 points. Can we do 560 points on the Dow Jones and things just blast out? It can do it on earnings. Couple of good earnings from some big weights. We still have a whole bunch coming up. You can get 560 points, in my opinion. And if we drop, we know what the level is. As Mr. Heisenberg has pointed out and shown repeatedly, we have 1, 2, 3, 4 times we can bounce off this. Now let's talk stocks. Is everyone with me so far?
Yes.
Yes.
And Ms. Thomas, are you connected?
Yes, I am.
There you go. Welcome back. All right, let's go on. Normal drawing mode. So that's what I'm looking at right now. Okay, so far looks good. And by the time we get back there, things are going to look a little bit frothy. What stock? Now we're going to talk stock. What stock alone can take the market up to S&P 3,400? Another 560 points on the Dow.
Boeing and Apple.
That's it. Forget Apple. Apple's already way up there. Boeing. So that's what we're going to talk about right now. Different thing. Oh, I love this. Look how perfect these lines are. Futures are up 4 right now because China is pumping liquidity. China has removed $75 billion worth of tariffs. China is working very well with President Trump. They had conversations, President Xi and Trump. What more could you ask for? That's what we want. Some strong arming, getting them to change some of their bad business behavior, giving us U.S. companies a chance to really compete fairly there. At the same time, U.S. companies are attacking the biggest market in the world, China. And so China gives some, we give some. But it's looking good. And this is what a beautiful bull flag looks like. Now, what is this pattern here? This is the last thing I'll say. This one, a very powerful pattern, which you can make a lot of money on trading the market. I mean, the SPYs and SPX and all kinds of stuff. What is this?
A descending bull wedge.
A ascending bull wedge? Is that what you said?
Descending bull wedge.
A what?
Descending bull wedge.
How do you say descending? We call it a rising wedge. How do you call it a descending? I'm just curious. Maybe you're looking
Because of the last part.
because of
Where
this
there's the top and the channel down. That's the descending part of the wedge, but it's a bull.
Okay, we call it a bull flag. Basically, we call it a bull flag consolidation channel. I see what you're saying. So this is a rising wedge or an ascending wedge. There are different names for it. And then this consolidation is what I told people not to fear as long as these support levels held. We have had many bull flags along the way, which are nothing. This was a consolidation channel that lasted 2 days, 48 hours, and everyone freaked out. 48 hours. It started on Thursday at 1 o'clock in the morning, and look at that. So this is what we call a bull flag, a classic bull in a bull market flag. If it breaks, then obviously we're going to change our mind. If it doesn't, we stick to the long pattern. So saying all that, let me just show something very quickly. Highlighter. Here we are. Oh, anyone still own L Brands?
No, sold out.
I still have a little bit. Right now, news breaking. They're selling good old Victoria's Secret to Sycamore, which is one of the largest private equity firms. That stock should tomorrow jump another $3. So there you go. So always have a little bit in there, a little bit. But we did well with it. You did well with it when it popped, right?
Very well.
There you go. So that's no harm with that. But I knew they were going to do this. Victoria's Secret, gone. So sold. So saying all that, this is rising wedges. They generally tend to correct a little bit. It is still a bull flag pattern, and then they move within the context of looking at the underlying technicals. And as long as the technicals haven't completely broken down the internals, which in this case is the full stochastics, and we're going to talk about the McClellan oscillator in a second because we applied that during extreme pullbacks in the market all the time. And my friend here, Fish Eyes, knows very well. He's probably one of the masters of reading the McClellan oscillator. We should call it the fisheye oscillator. It's like, oh, picture perfect. You don't need to be a rocket scientist. All right, don't overthink this. So bottom line is, it's a bull flag, and can it change rather quickly? Yes, it can. But I'm just showing you what's in front of us right now and what we have predicted. That's what matters. So let's get these drawings out now.
Jesus Christ.
What happened? Mike, we can hear you saying Jesus Christ. What happened?
Oh, I'm trying
Something else.
to,
Yeah.
I'm trying to look at one of your charts on Instagram, and I just don't use the app enough to do something with it. So I'll just be done with it.
No problem. I see. Okay. There's something more dramatic happened. Don't worry about it. All right. So bottom line is, I want you guys to focus on something. During sharp pullbacks, intraday pullbacks in the market, even in the longer term picture, this is a 1 hour. It's not even that long term. 1 hour charts, which goes back to Wednesday of 22nd of January, still encompasses a good amount of trading days. You see the McClellan oscillator, okay, going down to minus 300, minus 200. You got to buy. You don't need to be a rocket scientist. You got to buy. You got to have some moderate long positions because these are extreme oversold conditions on a very short term basis. Look, I don't need to just say it. I'll show it to you. It's almost at minus 300. Boom. What happened? We hit a low, an interim low in the market. For a trader, we're not painting the big picture of what might happen a year down the road, 5 months on that. We don't know. We're not running billion-dollar pension funds, hundreds of million-dollar hedge funds. We're running small money. So if you want to think like a hedge fund manager or a big fund manager, that, oh, I don't see what's going to happen like a year from now and stuff, you're completely BSing yourself because the hedge funds are not making a dime in this type of market. And they're supposed to be the smartest kids on the block. Okay? So yes, keep an eye on the bigger picture, like we showed, the weekly and all that stuff. I didn't even show the monthly. That still looks beautiful. But you got to make money in the shorter term picture. Shorter term doesn't mean 5 minutes. We're not monkeys on a hot tin roof. Yes, we have made money in 5 minutes. I've given trades we're going to look at very quickly that have jumped up 40%. In what 40%? 160% in 5 minutes. What was the one that we did that jumped up 163% in like really 10 minutes? Just took off? Just the other day. 90% on Friday. What took off? Heisenberg knows. Just went boom as the news came out. Huh?
Was Tesla?
Forget Tesla. Tesla, we've made a crap load. I wish I had held it from 1 to 100. No, not Tesla. Your favorite stock, Moderna, mRNA.
Oh, yes, yes, yes,
Exactly. But there was another one that went up 160%. It's right there on my Twitter feed, and I'm trying to remember what it is.
Was it
I
Caroline?
think it was Uber.
I'm sorry, which one?
I think it was Uber.
No. Uber was a great earnings play, and now we're long. It went up another 80% from that. No, there was something else.
Was
that
it
just went.
Caretex? It was a medical stock, right? I
It's a
remember.
medical stock. Either it's ALNY, Alny. It was a medical stock.
Oh, it's CLVS.
What?
CLVS.
Clovis. No, Clovis
Clovis.
dropped.
No, no. Clovis slowly and surely moves up. No, there was. I'm trying to remember. I'm going to look it up on the Twitter feed. I just wrote like 5 minutes. Boom, 163%. It was moving like a rocket, and then it pulled back. And
Was it Alteryx?
Huh?
Was it Alteryx? It jumped up and then it moved back after.
It's one of them.
Trade Desk.
Docu had a big run up and then a slight pullback, but it wasn't medical.
Docu is a beautiful chart. No, it's something else. I'm going to know. 1 second. So let's focus on this. My apologies. I should remember. I'm the one that's putting it out. So on Tuesday, same thing. Look at that. So now we actually went down to almost minus 400 when earlier on where futures were down 12 points. And now it's starting to turn. So anytime it gets into that minus 300 to 400 range on the 1 hour chart, if you're an E-mini futures trader, you could definitely make a lot of money on it overnight. And but it generally means that the market is going to bounce from that level. Futures are up 4 right now. So just keep that in mind. Once it gets up into that 300-400 level, that means the markets are short-term peaking. Am I clear on this?
yes.
And this applies to stocks too. Anytime you see minus 200, minus 300 on the 1 hour, New York Stock Exchange McClellan Oscillator, it means the market short-term is starting to bottom. Or the stock short-term, you can play the bounce. Always has worked. Now, what is more reliable is the 4 hour, which is the closest cousin to the daily. Okay, the 4 hour. So let's take a look at the 4 hour. And it'll show you a slightly different picture. The 4 hour is not that oversold, right? The stochastic is, which I like a lot. Look at that. The stochastic is like bouncing off this, the 20 RSI level. See that? So that's nice. I like that. It's still a nice bull flag, all kinds of good stuff. And what we need to do in order to really scare the daylight and create a sharper bounce is get back over into the rising wedge, and that would be over 33.41 right there. Everyone see that? Once we get into that, we could have a quick short squeeze, systematic technical short squeeze by all these CIT funds and stuff, trend trading funds who basically just move with the momentum to get a quick pop up to those levels or at least to the previous high. So saying all that, this is not that fully oversold, but if it ever gets down to minus 269 on the 4 hour, buy with hands down. This is directly correlated with my other chart on the other McClellan Oscillator chart that updates at the end of the day. All right, enough of the markets. Let's talk stocks. So I'm going to ask. By the way, who's Dark Horse?
That's me, Moipa.
Oh, I like that. I love it. Changing thing. Yeah, I like that. Okay. So let's. So who did well with the? There was a good suggestion I had from a great member. Just to ask, so what was the stock that you did really well on last week? Anyone, please step up. Or did well on, or felt like you could have done better, but you still did well on.
Frank, I did one of the active trade Amazon and picked up at 9:41.
This is on Friday, right?
On Friday, yes. Sold an hour and 46 minutes later at 15.75.
Correct, because Amazon was having, and I came in a little bit late in Amazon, mind you. And the chart that I'm going to show you on Amazon that, because I was being a little bit lazy on Friday. I wasn't being lazy. I had to do a couple of things, and there was some bunch of winners. So this was the chart that I was trading on Amazon. And again, you did take a quick peek at the chart, most importantly, before you bought it.
Yes. Yeah.
Good. And this was the chart on Amazon that that I showed you guys. All right. This is off my quad platform. Brilliant, brilliant platform. Here's your, oh, come on. This was Amazon on earnings. In one single day, it made a new high. And one single day, Jeff Bezos is the richest guy in Mars. So go figure. Not that he's not rich. Okay, hold on. So what Amazon is doing is the stock is, let me get the pen. Highlighter. Okay, good. So Amazon did this earnings monster, and then it's creating a nice F, a consolidation band. There's nothing to it. Pretty simple. The bottom end of that is 2,000. The upper end of it is 2,140. Is it a possibility Amazon breaks over 2,140? I think so. If market conditions are right, Amazon's going to 2,200 or more. Because this is what I did for you guys on Friday as you jumped in. I looked at this hourly chart and I noticed that this level here, and please review my Twitter feed, the more detailed chart with more lines drawn and showing there. I noticed that the stock was moving. I was a little bit late, but I did notice that this level was the 220.75 level. So you bought in the money calls, the expensive one, right?
The 21.35, yeah.
Oh, actually, I did ask people to buy the 21.35. They were still double-digit numbers, right? Like
yeah.
$17. Okay, that's fine. So I basically said, you know what? It looks like it's a range breakout, which it did, and that it was going to head towards 21.33. So you can play this as a swing trade, or you can take some money down within minutes. Because when these type of movements start happening, the elephants are moving in. The hedge funds, mutual funds, whoever are buying it, the shorts are getting squeezed. So it's a range trade. The upper end of the range is the previous high, 21.34. The lower end of the range is 2,000. The mid ranges are all these lines. Okay, and the first line is your 50 SMA on the hourly. That's around 20.62. But as you can clearly see here, Amazon is a very fast moving stock. So this is what it's doing. So at this point, Amazon is 20.31. This is your trading range. 2,100. The stock closed at 20.75. If things go right with what was the number we're looking for, which is the most important one of the most important numbers for Amazon to move, comes out on Friday. It's the retail sales number, right? And the retail sales is no longer just bricks and mortars. It takes into online sales and everything. Amazon will make a straight breakout towards 21.30. You can play it. People who play Amazon, people who play Tesla, people who play Netflix, they better keep an eye on things, all right? Because hedge funds are day trading the stocks like monsters. But I'm showing you the roadmaps of what might happen and where it can fall to and this and that. But you can't fall asleep at the wheel. I'm not telling you to trade this every 5 minutes, but so far so good. Amazon's going higher. Somebody else step up and tell me some stock you did.
Hi Frank. This is Zafir. I did great on the G options. They were 38 cents, and I sold them, I think, nearly 55 cents.
Very nice. Very nice.
Just wanted to see. I also bought common stock. Also with like I went in heavy on it.
Okay,
I just wanted to know when should I go back if there is a pullback, like where it should be.
Okay, let's take a look at it. Okay. GE's I thought that was the GE chart. By the way, Amazon I know there's a lot of lines on it. Let me just make sure that people are not asking questions and I'm missing them because that's another screen. No. All right. Amazon. Oh, I can't draw on this. This is an actual chart. No, can I? Actual chart. So yeah, sorry. I thought I was on Thinkorswim. Very quickly, what is this pattern here?
This looks like a cup and it's about to do a handle.
Yes, yes, yes. So you're looking at it wide. I like that. The last time Amazon was up here was in August, long time ago. This was the first cup and handle. This was your neckline, right? It broke out like a monster. It didn't wait for any nicety. It just said done, boom, right? So once it broke out the neckline, what is this pattern? Come on, guys, quick, huh?
Bull flag.
The bull flag. Now, it's a wide-ranging bull flag. It can drop from 2094 to 2053, 50 points. But as a longer-term swing player, you say, okay, it's a bull flag. As long as 2040 holds, this stock should continue higher. There are positive divergences. By the way, this I wrote like weeks ago. There are positive divergences on this while this consolidation channel was happening. And this S stock, as we call it, slow stochastics, I'm not going to explain all that right now. This is not a training session. This is more a forecasting session. Is telling me higher for now. So can Amazon hit 2100? Yeah, I think so. I'm going to go above that. Yes. It's a $2,000 stock. Even if it goes up 2%, that's 40-some dollars, correct? And so pretty good. Calls are expensive. The premiums are stuff, just so you know. So you have to buy out of the money, and if it doesn't go there, then your option will deplete in value. Let's move all this stuff, and we look at GE. Let's get this out. Bingo. Back to the. So here you can see the bull flag more clearly. What is it on the weekly? Let's take a look. I haven't taken a look at it. Oh boy, this is scary for the shorts. What is this number here? This is the first time I'm seeing the weekly chart on Amazon, by the way, just so you know. 2037. What is the major support on the weekly? What's this number? 1700, right? So let's call it 2037 minus 1700. Yes, 1700. What's the somebody else answer, please? What is the depth of this massive trading range from December of 2018?
1342.
No. What is the depth of this? It's roughly 337 points. Okay, which is a this is a massive from it's 2 years a deal. No, 1 year, right? November, December, yeah, 1 year the stock has been in this wide trading range. That's 337 points. Generally speaking, back of the napkin calculation, and it's worked tremendously. So old-fashioned traders still use that. The breakout happened at 2037. Add 337 to the 2037, you arrive at 2374. 2374. Amazon, ladies and gentlemen, is going to go to 2374 one way or the other. Now, in between, yes, it's going to basically vacillate a little bit more, but as long as this trading range holds, or even this one, 1700, 1842, 1830, Amazon's going to 2370. Now, if one of the things I always tell people, why don't you go out and buy a 2374 call or a 2400 call out there? I can bet you it's still expensive because the mechanical monsters, the algo monsters know, and the premiums are still high. Can somebody quickly look it up? What the 2400 calls on Amazon are going into, let's say, April? And is somebody looking it up, Z?
Yeah, we got it.
Yeah, looking it up.
Yeah, I'm looking it up too. Hold on.
2400 is 12.60 ask, and then 1095 for bid.
So not bad, right? So if
Yeah,
somebody
the
wants to bet on this, somebody wants to bet on this move here, and I can show you where the 12th thing comes from. I think I can do this. So what was the number I said? 2374? Holy cow, it hit exactly that, 2400. All I did was draw this big channel. Every other time I've done it with these massive stocks, believe me, People who've been with us for Shais will attest to it. It's worked. So now that it's back into this large channel, right? The acceleration channel, this one, watch. Ms. Thomas, are you with us?
Yes.
Good. Just trying to cover a lot of things at one go. Erase thing, get the drawing pen, and get faster on this stuff. Okay, highlighter. So here, oh, that's not the line. Such an idiot. Sorry. This is not the line I'm looking for. This is the acceleration channel that I was looking for. Right there. Okay. So let's change the color on this one to, this is the big one, right? This is the big, let's do a quick take on this. Why do I have a red line here? It should never be a red line. 3 and I'll leave it white. I'll leave this pink. Okay, we're all set to go. Ready, guys? Longer term projection, Amazon, 2,600 on the top end this year by, who knows, by July, August, before the big September, October pullbacks that generally happen in the market for technical reasons, primarily mutual fund reasons in October. So bottom line is, this is your short-term channel, shorter time frame channel, 2,400, and the big one, Amazon, 2,600. Everyone with me so far?
Yes.
There you go. GE. Enough of Mr. Bezos. GE stock chart is actually really, really powerful. Okay, but GE is GE, right? It's just like there's a lot of stock out there. I'm not quite sure how heavily shorted it is. I don't think it's that heavily shorted. Wall Street's warming up to it. But I'm looking at the fact that a massive downtrend line that goes all the way back to, look at the date here, April 7, 2017, is now being attacked, finally. See that? So if it stays above this, and I believe it will, the stock should minimally go to 1373, which was the last major liquidation zone right there, supply zone. See that? On October of 2018. Does everyone see that?
Yes.
Yes.
So if that's, and these calls move, man, we have shown it a bunch of times, and I don't even trade it that actively. When you buy it, just hold it. If you buy it at 40 cents and it's down to 15 cents, buy it, as long as the chart directional flow is still going higher. Look, the biggest money in trading is made when you are forced to dollar cost average. Listen to what I'm saying. You don't have to believe me. Don't have to believe me, okay? I'm telling you right now, you buy a call, simplistic speaking, at 4. The stock basically vacillates. You're forced to dollar cost average, or you choose to dollar cost average. In my case, I choose to dollar cost average. If the overall swing chart direction, like the Clovises of the world, just to give you one small example, and that's a biotech, so it's more freaky than other stocks, is in the right direction. So if this stock vacillates a little bit, and the general cup and handle multiple W formations are intact, and the calls, let's say you bought it at 40 cents, and they go down to 15 cents on one particular day for an hour, and you're forced to, let's say you had 10 here, just giving small numbers, okay, you have $400 here, and you decided, okay, I'm going to buy 10 more here, and some people have 100 of them, right? That's $4,000. So you decide, okay, you're going to add some more here. This is a serious play, because you're forced to dollar cost average. Now you have 20 calls, you have 20 contracts with an average of 27.5 cents, right? Instead of 40 cents. You guys are with me so far?
Yep.
Very simple concept.
Yes.
And then the stock bakes out, which it generally does in this type of situation. Then you're selling this thing at like 60 cents, if not $1. making yourself anywhere from 100% to 200%. You don't even have to watch these things. Now, unless GE totally breaks down, which is a completely different story. And where is the breakdown level for GE? Z. Let me just make it bigger. Hold on.
There's too many moving averages, but I would say like 10, 18.
Yes. I would say I would not like it if it approaches 1096. I would not like it, period, as an active trader if it breaks below 1137. Got it? Because then what's happening is it's a CIT, change in trend. Everyone with me so far?
Yes, Frank.
Exactly. So I wouldn't like it that much. But realistically speaking, yes, it doesn't fully collapse till 1009. But why am I going to suffer the pain of holding a bunch of calls as I see it sliding? So I would get out. I would not short. I would see 1207. This is the trader's friend right now, the 5-day moving average. Some people use 8. I use 5. Miss Thomas, why do I use the 5-day moving average? Just take a common sense guess.
It's quick for short-term trades.
That's not my answer. Why do I use the 5-day trading? I know it's short for short-term. You're dead right on that. But why do I use the 5-day moving average? And please, no one else answer. I'm just trying to help her. Okay, we don't have that much time for you. How many trading days are there in a week?
5.
Thank you very much. That's the reason why I use the 5-day moving average. Okay, so that's your yellow line here. Always use that as yellow. The blue is my 20-day moving average. The orange is my 34-day, and my red is my 50-day. Some people use 8 days. Some people use 9 days. I use 5 days. Hey, that's it, and it works very well. So this is your short-term number, which you'd be watching for, 1217. 1217 breakage doesn't really mean much, but that means the short-term momentum on the stock is starting to slow. Okay, now, Ms. Thomas, what stock would you like to look at?
TLT.
I don't do TLT. I know TLT is but I'll give you my this is the iShare. Explain to some new people on what is TLT. This is a 20-year bond. What?
It is an ETF that follows 20-year plus bonds, U.S. Treasury.
Does it follow the yield or the price?
It follows the price.
It follows the price. Okay. So as the price goes higher, yields are falling, correct?
Yes.
So you're expecting, your thesis is that bond yields, the 10-year and the 20-year, is going to fall going forward?
I don't know. That's why I'm asking you.
Okay. I think bond yields are going to rise because I
agree.
I look at the TNX, as a 10-year proxy on the market, and I believe the bond yields now are short-term, quite oversold, and they're going to rise towards the 1.8, 1.9% level. Okay, so but saying all that, this is one good-looking chart. Okay, now the TLT, you buy calls on it, right? Generally speaking.
Actually, I've been shorting the shit out of it since August.
I like that kind of language, lady. Okay, I like it. So technically speaking, let me just 1 second. Technically, so if
I found this weird thing where it lines up with 30-year bond auctions, and on those dates, it mysteriously happens.
Always, right? And the bond auctions are always the most manipulated things ever. So I'm totally with you on that. So let me ask you this question, Ms. Thomas. Why aren't you looking at the TBT then? You're shorting this instead of buying the TBT, which is the inverse of the TLT, correct?
Oh, I was shorting TLT beginning of the week, but then I went cash on it because I'm not sure at this point in time.
So let me explain one thing to you. Technically speaking, this is a pretty powerful formation, okay? Which means that it will at least attempt to hit, technically speaking, all right? It's an attempt to hit 148.9. Got it? Because all these candles, especially the last mini reversal candle, is telling us, so are the internals, that it would at least it might find a big resistance here, but just looking at the overall picture, it's like it's a cup of a bull flag. Got it? So look at that. So
right, that's why I'm worried about it. I'm pretty skeptical.
Okay, that sounds good. So this is my reading on it, and I don't trade it, so I'm just letting you know on that. Now, shorter term, this is a weekly chart, so it's a far different story than making money on the shorter term. So on the shorter term, excuse my French. Okay, on the shorter term, this is what it looks like. 1 hour I'm looking at. It looks like it's going down. It's going down. Okay, so you're gonna make money on it. So bottom line is that I expect this to come back down towards the 143 level because it moves in increments of $1 to $2, generally speaking, right? It generally just trades like $1 to $2 on a certain day, correct?
It does have these gravity points, yes.
Exactly. Okay, so there you go. Now looking at the direct correlation with this is the 10-year government bond. I look at the 10-year more than 20-year because that's more of a proxy for short-term rates. The 10-year government bond right now on the daily is starting to look, and this is not necessarily great for the market, not necessarily bad for the market. The reason the 10-year government bond is going to probably hit 1.5% within the next 48 hours. Why? I explained that earlier, but not directly, but tie that together. What's happening on Tuesday and Wednesday?
Yeah, Powell.
Yes. So do you think Powell's going to be really aggressive and say that, oh my God, I'm going to raise rates like crazy in the middle of the coronavirus crisis and global slowdown and all kinds of stuff? You think he's going to say that? I don't think so. I think he's
really. I think what it has to do with the Treasury General account and if they want to increase or decrease that.
Correct. I'm looking at it from a trader standpoint, which we're pretty shallow. Remember, equity traders are the most stupidest guys ever, but the bottom line is we don't overanalyze too much. But what you're saying is that correct, okay? My thing is if Powell is going to be dovish in his statements, okay? He's going to be dovish in his statement. And if it's dovish, the bond market is going to read into it. Then this other technicality is going to come into play, as you're saying, and then basically the yields are going to come down. So that's it. And that's my read on it, and I think I'm going to be dead right on it. Powell is going to be dovish. That simply means that he's going to say he's not in a rush to raise rates. He's going to let this thing flow, and the markets are going to hit about 1.5% or so, somewhere there. And if it completely breaks down, then we are going to come back and retest this level, which was the horrendous low level that we were on Treasury yields. So. Don't want to get too much into it, but you're absolutely right, Ms. Thomas. And I'm trying to explain to my general traders. I think Powell is going to be soft and not push the thing. The stock market is going to like it that he's not in the business of, he's not pushing to raise rates anytime quickly, too soon. Banks are not going to do well, so that's going to be a little bit of a drag because banks would like to see some moderation on the yield curve, and the banks, generally speaking, might not necessarily like it too much. So. So I'm not trading banks here, so it doesn't matter. Okay.
Hi, Frank. Again, I don't want to take too much time, but I remember two more stocks. I remember we talked about Novavax and it had dropped. I wanted to see that in Etsy as well because Etsy's chart is almost a duplicate of
Okay, Novavax. Let's start off this here. Etsy is a serious company. I don't like this chart. But every time I told you I didn't like the chart, and the stock went up, 22%. But Novavax is a vaccine. Now, if are they working on the coronavirus?
They said they did. They do. They start.
Okay, so then it's definitely a play. I would, it's a cheap stock. So yeah, I think look, this stock is news driven, it's hype driven, it's chat room driven. Okay, so it can very easily pop up to 8. So whatever I say, do the opposite. I don't particularly care about it. I don't think it's a bad chart. I think it's creating it's a nice type of, 1 second. It's a falling wedge, okay? And as long as it stays slightly above the wedge, it can pop. So that's my read on it. So, and given the fact that it's in a sector right now, which very much in demand, and retail normally drives Novavax up and down. Does that answer your question?
Yeah, thank you so much. And Etsy looks almost like Pinterest's chart. Like I compared them both, they're identical. So, and Etsy's earnings are this week as well.
Exactly. Etsy's this week, Shopify this week. Yeah. So all these internet retail companies, all right, let me just get this out of the picture and let's take a look at Etsy. Yeah, it's a good looking chart. This is your daily chart on Etsy. It is a short term. It's a buy. Short term, it's a buy. Anything can happen on earnings, mind you, but short term, it's a buy. And how would we show it? We'd show it like this. It's a cup with a double bottom, which we like, a handle, which we like, a gap fill at 52.17, which is $3 from here. That's a really nice return on your options right there. A range on two necklines. So your floor is 46.47. The stock must hold that. Got it? And a breakout over this, 55 on great results. Upper end of this complete pattern completion is 60 on a slightly longer time frame swing trade. So yes, net best case scenario, or, I don't know best case scenario or not, but I don't know. If Etsy's heavily shorted, stock's going to go up like bang. So bottom line is, it can go up to 55.
Yeah, bought some few comments. I didn't know how their options work, but
check. Go to some of the sites which deal with short positions and stuff. Try to find that out. If it is a big short position and the delivered numbers which are good, it's certainly an earnings play. There's no question about it. I'm going to show you guys Shopify, which is a monster. It's a monster with fangs. You know, the new term. Everyone know the new term? Everyone knows fang, right?
yeah.
Mm-hmm. Okay. What's the new one? Starting on Friday, that was formulated by Mark Mahoney, who's the biggest internet analyst out there. You guys didn't hear it?
No.
Fang you. Fang you. Now listen carefully. Fang you. What's the you?
Uber.
Thank you. He put Uber and created, that's how powerful Uber's numbers were. And Dara Khosrowshahi, whatever, I said I think his name right. It's huge. Now fund managers are going to be, and you're going to see this term coming out more and more. He added Uber as one of his top biggest. I'm not saying I follow analysts. Guys know I don't. But Uber can go a lot higher. It's already higher. It's just right now. It's just touched. I showed you guys this gap a while ago. And I don't even trade Uber. You guys know that. I told a friend of mine, I've never even taken an Uber. Has anyone here not ever taken an Uber?
I have not.
Have I ever sat in an Uber? Yes. Have I called an Uber? Never. But what am I? I'm an idiot. Everybody in the world is
Dude, I took Ubers in Mexico City.
Oh wow. Well, Uber's like all over the world, right? So they're a technology platform. They're not a cab company. They provide technology. So here's this gap here, right? Here was this gap from back in August, and all it did was come into the gap. This is one powerful chart. So I'm expecting Uber to hit this level right here, where the last major, one of the big sell points came in, 45. So I play Uber in increments of $2 or $3. The calls are cheap. They're very elastic, correlated with the price. Nice IV, nice gamma, theta, alpha, whatever, the what do you call it? Options, the gamma, let's put it this way. I like it. They move. They don't stay stagnant. They're not like some of those biotech stocks, which are up $3 and the option is like sitting there, like, lazing in the sun. They're good. So I expect Uber to go. Uber's high was what, for 47? All-time high? Let me see. 47. It's at 40. I think the stock's good for 43, possibly 45, and God knows, maybe it takes out the high. If it takes out the high, the stock's going nuts. And it's Fang Yu. Okay, so let's write this down so everyone knows that. I didn't make that up. You can Google it. It's Facebook, Apple, Netflix, Google, and now Uber. So how about Fangt? F-A-N-G-T. Tesla's now the monster. I don't know why they never, got that in. How about Fang T? It can be Fang M. Microsoft is a serious stock that you can trade, So anyway, so that's it. So the fact that it was very interesting. I know Mark Mahoney, know of him, have Met him in seminars way back from the Wall Street days. He's been around for a long time. He's a well-spoken, he's not a crazy guy. He's got some serious calls, and he thinks before he speaks. So this is good. The Uber we like. Let me show you guys Shopify, and unless somebody has any other stock, I am going to wrap up. Mr. Heisenberg, you have any other stock you want to look at?
I think you talked about Moderna already.
I'm going to show you Moderna. People have to see Moderna stock because I don't think a lot of people are in there. So, which I'm sorry to hear that. You just bought it, okay? Good. Hopefully it opens up.
I mean, if you're willing, JP Morgan, but I know you mentioned you don't trade banks.
No, I'm not trading banks now. That's all. But JP Morgan chart is great. Absolutely. I'm not trading banks now. Of course I trade banks. I trade Goldman Sachs. I've traded Bank of America for huge profits, JP Morgan, and BlackRock. Those are the ones that I trade. Okay, so look at this chart of Moderna. The US government is dependent on Moderna, which is one of the finest biotech companies, mRNA technology. Read up on it. Okay, that's why they call themselves mRNA. So bottom line is, this was an IPO from back in December of 2018. We actually played the IPO just the way we were playing. Who's making money on Bill Gates backed IPO that I gave to you guys at $26, $27?
All hail CTA.
All hail CTA is great, man. But what's the symbol of the stock?
SDGR.
SDGR. I don't even know how to say the name. What's the name?
Schrodinger.
That's Heisenberg's buddy.
Yeah. It sounds like a nice, rich Jewish dentist in New York. Mr. Schrodinger. Don't kill me with that crown, okay? He'd be like, "Don't worry, Frank." I'm just kidding around. So bottom line is 26, 27, 28. Where's the stock? I gotta look it up on my screen. Where's the stock?
34, I think.
Yeah, 33, going to 40. And once it filters in, and Grandpa's like, "Oh, Bill Gates is buying it. Okay, I'll buy 1,000 shares. Get it in my broker." Boom, 50. I'm dead serious. That's how crap this works. And that's the same thing it worked with this thing. It's the first 30 days before the quiet period is over, when the companies can start talking about themselves. And this one's got so much hype. And not only that, I did some little due diligence on this. It's serious crap. But let me stick to Moderna. So Moderna is looking pretty damn good. They're working with the US government, National Institute of Health. This is where the stock came public. 23, fell to 13, and ran like a monster to 30. Then fell like a monster. Okay? But their technology is way up there. They're from Cambridge, Massachusetts, which is one of the biggest biotech hubs in the universe, aside from California. And Kendall Square, actually. I'm from Boston, so I know. Genentech is from there. Regeneron has offices there. All the big shots have offices there. So anyway, so this one looks great. Now, great, does it mean it's going to go straight to 30? What the heck do I know? All I know is I'm looking for 24. I'm looking for 20. I'm looking for 28 on Moderna. And these calls are cheap, and they're good, and they make money. And they come up with this vaccine, which they are said they're in the last stages of doing. Stock will be 50. Because all of a sudden people will be like, "Moderna, what?" People think, you say Moderna, they think it's some sort of Italian fashion house. Okay? I'm dead serious. Does it sound like really a biotech company? They normally have like really weird names, like, Clovis. What's the other one? So many other names, like, Bluebird. I like that name. A Biomed. Like, who the hell came out with that name? A Biomed. Like, you're drinking one night. Like, what should I call a company? And it's got like really high-end technology. Oh, what do we call it? A Biomed. Oh, okay, great. So bottom line is, net, the stock can on a swing trade can go to 42, right there. Okay, just letting you guys know. Get in the stock. In my opinion, again, obviously my opinion. I am looking at the move here. This is what the short-term move should be. Has 60 minutes and stuff done any shows on Moderna yet? Because that normally pops up the stock $2-3 on Monday. They didn't, right? These shows, no?
No.
Okay, so one of the biggest things about trading you learn, if it's under the radar and no one really is talking about it, and you're and your laundry guy is not saying, hey, you're Moderna, they're coming up with the vaccine, in that case, sell the crap out of it, possibly short it. But aside from that, if the so-called media is not talking about it that much, which they're not, the stock's going to keep on going higher. Just simple psychological behavioral finance, all right? So I'm looking at around 30, which will be sweet. And if it does get into this channel that it broke back in June of last year, then the stock, if it breaks back into it, see you later. Next, 1 second.
CVM.
Wow, your voice is loud. 1 second. Just want to show one other thing, and then.
Okay, I'll whisper.
No. You have a very clear microphone. I guess that's why. It's crystal clear. Let me just quickly show what's the other one we were just going to see.
Shopify.
So Shopify's chart is pretty sick. This is your weekly chart. What's the daily? This is your daily chart. Okay, Shopify basically is creating a high-level bull flag. Now, this is a very highly priced, high valuation, high beta stock. So that means one slip of the number, stock will be down like, if they miss by maybe 1 cent, or they say, oh, we're not going to sell like a gazillion billion dollars worth of stuff, the stock will fall very fast, very quick. So it is a high-risk stock. Technically, it looks fantastic. Well, we call it Amazon Junior, even though they actually build the platforms for setting up online commerce, but this is it's a very powerful thing. It's a Canadian version of Amazon. You have a large cup, you have a small handle. It broke out. Now it's creating this. So the stock could very easily fall 50 points to 438, 415 on any type of minor guidance weakness, or not even weakness. Just they didn't, they just have if they say even like, oh, we're going to do great, but boom, the machines are going to sell it. So I'm ready for it. Beautiful chart. Upper end of the picture is almost 520, at least 5495 to retest the highs. And if things go really nuts, seriously, the stock will go to 550. The IV on this implied volatility on earnings, I believe, is $60 or something like that. I'm going to tell you right now. That's what the estimation is. I see that on Thinkorswim or whatever platform you guys use. It's $43. So they're expecting a $43 plus minus on earnings on Wednesday. So good luck to all. Let's see. The one other quick way that you can play these things without completely blowing up on the options if it doesn't go, because options are expensive. And I bought in the money. You can buy out of the money. People who bought out of the money Amazon calls, they were still up a gazillion, 600, 700%, right? There's like the ones in the money were up like 4,000%. So bottom line is, yeah, you can buy out of the money. The other way to do it, buy a couple of shares. So if the stock pops up $50, you can sell it after hours and say, whoop, made some money. That's another way of doing it. All right? Just so you guys understand that. Because options, you can't sell the next morning. And what these option makers will do with the market open, we don't know. Because they're all real bastards. The market makers on options are the worst. They're highway robbers. Okay? And you can't do anything about it. You can scream and shout at your platform, your trade provider, whether it's Interactive Broker or Thinkorswim. They'll say, sorry, that's what it was out there. And you'd be like, what the hell? All right? Just letting you know. That's the reality of the business. They're complete highway robbers. So one more line I'm going to draw on this to complete this nice picture. That's exactly where it's resting, right there. This is 530. This is 600. This is 371. That's if they're really crap. It'll go there, believe me. It'll fall 100 points. Otherwise, these are supports. 412, 440, 462. This is not for the faint of heart. Great company. Your symbol, please, Ms. Thomas.
CVM.
Great looking chart. What is this company?
It's a biotech.
And what sector is it in the biotech side? What is this?
I believe cancer.
I see. Hey, there's another stock that we can start to take a good look at. This is a very powerful chart.
Yeah, my boyfriend's written a whole bunch of articles about it on Seeking Alpha, so I thought maybe I should take a look at it.
Oh, he writes for Seeking Alpha? That's amazing. So you got a
Yeah,
you got a smart boyfriend. That's a good one.
finally, I got one.
That's the best part of the thing. Oh boy. And he's a Canadian one, right?
He is.
I know. My sister-in-law's a Canadian one. He's smarter and richer than me, I'll tell you, you know. And so my wife's like, I should have met a Canadian guy. I said, honey, I'm the one who introduced you, your sister, your younger sister, to this guy. She's like, yeah, I know, you know. So that's the way it goes. Good for you. Congratulations on CVM and your boyfriend. Is it you can text me and I'd love to read some of his articles.
All right, word, I'll forward you.
Yes, and remember one thing, you have to be careful because it's kind of, it's not he's an insider, he's just a writer of the thing, right? So we have to,
Of course.
exactly, he's not an insider. Just keep in mind, everyone, full disclosure, Miss Thomas's new Canadian smart boyfriend is not an insider of the company. He just expresses his opinion on Seeking Alpha, which is one of the best analytical sites anyone can read, seekingalpha.com. It's an app too, so you can use that on your iPhone. No, this is really, really good stuff. We have it, CVM. Let me write this down. And we like it. So where do we think it's going? So let's get a little bit serious here. And
he is projecting way out of those lines. He's thinking above 80, obviously.
Above 80?
Yes.
Okay, because technicals are just showing us what's happening short term. So he's expecting a major drug development, a major FDA approval, or something of that nature. Am I right?
Yes.
Okay.
But you got to be wary because, these biotech things, it happens, comes and goes.
Absolutely. I'm totally with you on that. Now, you guys heard this, right? So if this goes there, you better send some nice gifts to Miss Thomas here. So
her boyfriend better.
Excuse me?
Send the gifts to the boyfriend.
Yeah, send him flowers.
Send him flowers, yes, and nice picture of you, and he might call you up. I'm just kidding.
Don't send him pictures of you, please.
No,
no, it's all right.
Our members are just
not
kidding.
Gonna happen.
Yeah, not going to happen, no worries about that. So bottom line is, let's take a slightly longer term picture of this. Obviously, he's a big believer in the stock. That means, he obviously knows this stock. So I'm just going to draw just look at the weekly. So the weekly is the stock came to life back in February of 2017. So it's not like an old company. And what a nice move on the stock. Oh my God. It was trading in a range of $1 to $2. This is like a biotech kind of dream stock. $1 to $4. And then now the range is 9.5 to $3. So that's $6, right? So let's do my quick Clueless 8 type of back of the napkin calculation. Okay, Ms. Thomas?
I'm with you.
Okay, so $4 here, $10 here. That width is 6. Depth. Add 6, 16. That's exactly what the stock is going to right now. Now, if it goes to 16, it basically creates another trading band. Not that it has to drop from 16 to 10 again, but that's a 6. This was 6, right? This is 6 again. Is everyone following me so far?
Yep.
Add 6 to 16, 22. One step at a time. I'm going to do some due diligence myself, read this on Seeking Alpha, and I like what I hear. Technically, I can't project it. I mean, I can, when somebody says, can you project what Tesla can go? I said, yeah, 1,034. Now, the way I did it is to extreme Fibonacci retracements. So we're going to attempt to do that on this stock here. And if the stock doesn't go to 80, are you going to leave your boyfriend? I'm just kidding. Are you gonna that's it. You told me 80, and now look what. All right.
I gave you the conservative estimate. I was hearing 120, but I'm saying 80.
Cow. Now, was he doing this when he was with you? Was he telling you all this stuff when he was with you? And you guys had a couple of nice drinks. He was very happy to see you, and because you flew out there, and you had quite a few nice drinks. And hopefully nothing else. And he told,
No, we were watching some nerd stuff like The Witcher, and then had a few beers, played some poker, numerous nights, went over our dates.
It sounds like a great guy, seriously. I like that. Okay, don't get too many TMIs, like, just keep it low here. All right, so bottom line, did you guys go shooting in the backyard? Because you were out in Calgary, right?
Oh, no, that he's further north than that, but he's coming down to visit me soon, and I'll take him to go shooting.
Yeah, so that's fine. So I thought maybe you were way further north in Canada. I thought maybe you guys would shot some elk for breakfast. I wasn't sure about that. So, but anyway, listen, this even Fibonacci extreme thing on the weekly. There's one more extreme. Let me see. No, 423 is the most I can get to. $42, guys. You heard it here first. Thanks to Ms. Thomas, one of our new members, and thank you for sharing this opinion with us. We'll certainly take a very good look at this stock. Okay, $42. Where's the stock right now? And this is just pure Fibonacci. I don't make this up. And it's right there, 43. On that note, thank you for attending. Let's have a terrific week. I'll try to keep you guys as abreast and notified as possible. Let's not overtrade. Let's be in some selective position. There's going to be a lot of flyers here and there. So let's not get committed. Oh, the market will definitely go higher or not. There's going to be a bunch of very choppy volatility for reasons that I explained. Thank you so much. Bring in the referrals. Thank you, Ms. Thomas. Dark Horse, it's time for you to join up instead of just staying on the free trial and making a lot of money on me for free. Fish Eyes, I love you. You know that. Heisenberg, Mr. Rodriguez, again, sign up. Free trials are only for free trials, all right? Make money. Join us. You learn a lot more. Mr. Mike, my respects to you. Paul, you just arrived from the, all the way out there in the north. And Z, you're the best. So that's it, my friends. Have a great evening. God bless you all.
Good night. Good night, guys.
Yeah, you too.
Good night, guys.
Good night.